What's up, everybody? I'm Andy with Forum Films. Welcome back to another edition of Creative Table. Today, we are joined by Kevin, my business partner, and our long-lost friend and colleague, David Smith, guru of all things small business financial. David, tell us who you are and what you do.
Whom you might recognize from season 1.
Yeah, thanks for having me back, guys. No, I am. I'm not going to tell you who I work for because we want to keep that secret. But I am. I advise banks on a regular basis on how to evaluate credit, what tools to use, how to use them, and I used to sell them systems in order to do that better, faster, stronger. Yeah, that's who I am.
And you spend a lot of time in the small business world.
Specifically small business now. Yeah.
So I think the value today to the viewer is David's super smart when it comes to small business lending, debt, good practices, bad practices. And there's so many creatives who are 1 or 2 person teams or small companies that are, hey, I'm a photographer, I'm a designer, I'm not an accountant.
Right.
Like, how do you get your stuff in order so that you are successful?
Mm-hmm. Yeah. And I want to know, to start the whole thing off, is where is the demarcation line between small business and large or whatever? Medium?
Yeah. So that's definitionally go to the SBA's website.
Yeah.
And because it's a sliding scale, right? A $10 million restaurant is a huge restaurant, but a $10 million general contractor is a small general contractor.
Yeah.
You're a small business. But it's generally $5 million in sales and under per year.
There you go. You're making less than $5 million.
Yeah, you're a small business.
You want to watch this episode.
Now, here's another thing. Micro businesses, under 250,000. Basically a one-person
like
shop,
a hobby business.
And not really hobby. It's the Uber drivers. It's it's the photographer working out of their basement. It's if you've got an S Corp or a small LLC that you're doing sort of maybe a second gig, something like that.
Okay, side hustle.
Yeah, you're considered a micro business, and you'll be treated a little differently. Yeah.
Okay.
I thought we were all treated the same now, though, David.
Well,
all treated equally under the law.
Everybody's treated equally under the law.
Unless you're a micro business.
It's just a matter of where and what data
but
they're
not
pulling.
Under the tax code.
No, and I meant where they're pulling the data from.
Right.
Yeah. Like you're not going to have a D&B report, a Dun & Bradstreet report, if you're $250,000 business or under, and you've never had credit. But once you lip over a certain amount, then in asking the bank for more money, they're going to expect you to have certain things. So, micro businesses, they're only looking at a very small amount of data. Larger, small businesses, they're looking at more data.
Okay.
So, and we're going to talk about some of that. Yeah.
I know for us, like we've been around for almost 10 years now, which is crazy. But there was like a slow growth of getting kind of out of the personal side of us to where the banks would look at the business side of us. And that was hard. And even now, like you go for a certain kind of, refi on the building mortgage or whatever. Sometimes they're like, well, we're still going to track you down and take your dog if you don't pay. It's like, I thought I had an LLC for a reason,
No, it's all personal guarantee.
Right. It's all personally guaranteed. It's all smoke and mirrors.
But to hear stories of that where people are like, no, I didn't have to do that, or I wouldn't do that. And they worked with me.
Yeah. How do you get through that? Elevate.
Again, you have to be larger than small, right? Yeah. When you have a CFO, full time, then you're typically in that range of nobody's putting down a signature guarantor, right? Mm-hmm. But until then, I remember the day you called me and said, "Hey, to get this contract, they want us to have a DUNS number. What's that?"
Yeah,
and it's a D&B.
That was a long
ID.
Time ago.
Long time ago,
like last week.
But but I remember it because you're like, "Do we really need this?" And I'm like, "Yeah, if you want to play with the big boys, you got to have it, right?"
Yeah.
So, but nice. It's a good sign that you're being asked for that because they're treating you as a a larger small business.
Yeah. I remember thinking, do we pay for this or is it free? Because we've had it for so long, but then it feels like you need to pay into it to make it do something else.
Yeah, D&B's got a different model. I don't want to get too far into it, but you got to pay first, and then you just pay for certain services after that.
Yeah.
Yeah. So if you're talking to like the micro business, the photographer, the designer, the solo video guy, like what's your recommendation on like first steps if you're starting out or you've been doing it a while with,
on the side
sloppily
gig.
handling.
You're like, I'm a creative. I'm not a banker. What am I supposed to do?
And that's the thing, right? If you want to start a business, you become a business. Yes, you're a photographer, you're a whatever. You are a business. Everybody's going to look at you as a business. You need to incorporate, or you need to get a tax ID number from the state and the Fed. You need to register in the county sometimes to do business and make, earn money. Sometimes with the state, you've got to be licensed appropriately. They will look at you through the lens as just like a big business, you're a business. So take that on and treat it properly. Set up books and an accounting, get an accounting software, whether it's a free system or whatever. And then once you're in that accounting software, ask somebody how to set that up. If you don't know how to set it up, ask somebody, look at templates, buy templates, talk to accountants, pay for them for their services.
Get a bookkeeper.
A fractional bookkeeper.
You don't need a bookkeeper up front, but maybe a fractional, right? I'm buying a tenth of a month. I'm buying 20 hours every quarter of a bookkeeper's time, right? It helps. It's going to make you legitimate.
The value of that is setting up your chart of accounts correctly. And
yes, absolutely.
Making sure it makes sense. I mean, there's no right or wrong, but just
it's got to make sense
organization
to where you can not only do it the first day, but do it the 10th day, and you're not pulling hair when when a bank says, hey, pull me a P&L report. I want to see, pull me a P&L and a cash flow report. Oh, I don't know what that is. Yeah. During PPP, so many banks were asking people, hey, do you pay your taxes quarterly? And they were like, what's that? Because they were asking for a specific form, like a 4956 or whatever it is. And they're like, I've never heard of that form. I'm like, how have you never heard of that form? You need to pay taxes quarterly. You're just not a business, right? You're a guy doing something, but you're not a business, right? So be a professional business person. And that's going to take a little money. That's a little overhead. And you need to factor that into your hourly. If you want to make $50 an hour, then charge $75 an hour, right? Factor in the overhead.
Do you have a preference on what business structure someone should go with when they're starting out?
Man, no, I really don't. I personally just sign up and get an LLC. Try not to do an S Corp.
You can be an LLC taxed as an S Corp, though, yeah?
You could elect to do that.
And that's where the flexibility, but you get protection, right? You get a little more protection 100%. On the when you actually incorporate to some degree, right? My business was an incorporated business. I just did a C Corp. But, I dissolved that and I'm going to go back to an LLC because I like the little more of the flexibility. Yeah. But either way, it shows that you're serious and not just, a gal doing a thing. Right.
Hobby.
Yeah.
Right.
That's a great name for a business, though. A gal doing a thing.
LLC. Business. Yeah.
No, but to your point about software, I think this is important because we're always, starting up, you're trying to save money, you're trying to be responsible. You go, well, man, QuickBooks, it quickly gets confusing. They have so many variations, and B, it gets expensive.
Yep, totally.
So you go, well, gosh, I'm going to do, what's the one? I've just lost the one of them, but like Wave Apps accounting. Okay? If you think you're going to grow it all and have more than 10 transactions a month in or out, just bite the bullet and go with QuickBooks because here's why. So we have a property company that has very little in and out bank action. It's basically we pay rent to it. It pays a mortgage. Yeah. That's about it, right? Yeah. It's just a pass through.
Pretty simple.
Yeah. We run that through Wave Apps because I'm like, I am not paying QuickBooks
like $40,
40, 50 a month, right? Wave Apps is $15.
No, I was going to say, as long as the two are compatible, that secondary accounting, that cheaper quote unquote accounting software, as long as it's compatible, as long as you can output those files and migrate up to QuickBooks and not have to re-enter every single invoice you've ever entered.
Well, here's what I was going to say. Keep that little business in Wave Apps, save yourself money. But if you're going to grow, just go to QuickBooks because your CPA is going to give you heck for it.
No, absolutely.
Every year because they're like, I hate working in Wave Apps.
Exactly.
You're going to get grief.
No, totally.
Right? You think differently. You're making me have to think now too.
Right.
And every industry has its 800-pound gorilla, right? Yeah. And QuickBooks is just that. Yeah. Find the cheapest option. Don't buy the buy.
It just consistently goes up.
Dude,
Ours is
using it years ago.
Way too much.
But
now.
it is the 800-pound gorilla.
It is.
And it integrates with all the other Intuit programs, so it works. So they know what they're doing. Yeah, they're not dummies over there. They get you. They get it.
At what point, in your opinion, and you're not a CPA, I know, but small businesses are like trying to do their own taxes. Like, at what point, in your opinion, do you want to flip to an accountant and get an actual CPA to do them? I have opinions, but I want yours.
So there's when you go to apply for it, I'm going to do it from a loan perspective, right?
Yeah, please.
When you have tax forms, the banks want to know that a third party looked at it. And if you can say CPA, that looks a lot better than some guy that does taxes out of a shed, And And sometimes that's all you can afford.
It's a great name for a business, by the way.
We're coming up with all
I
of the business
I gotta
names
go to
today.
GoDaddy and get these URLs locked down, man. But yeah, it's again, as soon as you can afford it, right?
Yeah.
Do it right. You don't want to end up in trouble with your finances, with the IRS, for goodness sakes.
It's a less red flag if it says
No,
CPA.
totally. Yeah, you look
submitted.
you look legitimate. You know, now your credit might stink and you don't get the loan, but you look legitimate doing it. Right? So yeah.
Thinking about loans, can I shift the loans for a second?
Yeah, let's do it.
Okay, I'm thinking back to when we were getting started, many years ago. In a world. We had money in the bank. We had money coming in. But we had trouble sometimes in those first 3 years, even right after that 2-year mark, which is the magic small business
2 years
mark.
is a magic mark, by the way.
We still had small bank trouble getting small bank loans.
Well, that was also part of the times, right? So if you look at the evolutionary
the times
process,
we're still living in.
Yeah.
No, no, I'm talking about the times that still exist. These times, the times now.
Back in 18.
No,
I want to gripe about that 2-year rule too. I mean, I don't know, it's so arbitrary sounding.
From a small business standpoint, though, the way they deal with credit, the way they deal with processing applications, just from a technical perspective inside the banks, has changed drastically in the past 7 or 8 years. And if you've been dealing with a larger bank, like a B of A or something like that, then you've been there. But if you deal with a community bank or a credit union or a regional bank, they've just moved into that space. I mean, I can tell you horror stories, and you guys have gotten on the dais with me and told horror stories about the process, right? But yeah, it's changed a lot. It's easier to get money. Now, let me say this. If you go off the traditional banking space and, pardon me, if you go off the traditional banking space and you want to get money quick, it's going to cost you.
Right.
Going to what we call
convenience store.
Yeah, no, it is just that. And in my world, we call them FinTechs, but those are the on decks, the cabbages, the insert name here, the stuff you hear on satellite radio and see on the internet. Go look at the APR, the annual percentage rate, and that'll tell you whether you want this or not.
Right.
A good bank loan right now is between 12 and 16% on a business loan. You're going to be paying 25, 40% at these FinTechs. So if you need the money, go get the money, pay for the money, right?
Yeah, but you're most likely digging a deeper hole for yourself.
You're not getting out of it quick enough. I mean, any loan's a deep hole. Any loan's a hole, right? Yeah. But it's how quickly can you get out of it? Yeah. Make sure there are no prepay penalties and that sort of thing, or fees. And the APR is going to tell you what that's the average percentage rate, which includes fees, not just the interest rate. The interest rate's different than the APR. So look at the APR, and that'll tell you if there are any huge fees on top of that loan. But going back to the question, the process has changed. It's gotten better. It's quicker. It's easier. It's less data, more information. In other words, when we talk about bank accounts and such like that, and you're saying, hey, we have cash, we don't have credit. Well, nowadays banks have the tools, like there's a tool called Plaid out there that dives into bank accounts, extracts data, and gives the bank all this calculated information from your bank account that you could never give them. Hey, David, give us this so-and-so ratio. I don't know what that is. Let me go Google it. Boop, Plaid's got it in 2 seconds. Yep. So they're not asking you for you to give them information. They're saying, give us access to your bank account and we'll go get it. Give us, just like sign here to where we can go look at your credit, give us access to your bank account, which is why I highly recommend everything goes into one account, everything goes out of one account. Now, you may have 10 accounts that you set up for various businesses or projects or whatever, but have all your dollars go in one account, all your dollars go out as much as possible. So they can see, oh, you brought in $400,000 and only $200,000 went out. Okay, you've got positive cash flow. We can work with positive cash flow. And so the more cash you have and the more credit you don't, we can balance that out. And by the way, credit scores are willingness to pay, right? It's more of a psychological score, right? When you have money, do you pay your bills on time? Are you diligent? Are you courteous?
Wait, you have to pay those back?
Yeah, you got to pay.
Oh, dang it.
What?
I got a story about that here in a second. But then the cash flow is the ability to pay back.
Mm-hmm.
What do they care most about? It's the ability, right?
Right.
So, story real quick. In the state of Georgia, to get a mortgage years ago, somebody looked at them when the mortgage company sent them a bill and they go, I didn't know that was a loan. Well, of course, they knew it was a loan. None of the documentation ever said the word loan. It just said the word mortgage, which is why in the state of Georgia, you have to sign a specific document that says you understand that a mortgage is a loan and you have to repay back, and they put in all the terms. It's a separate form.
Wow.
Yeah. Yeah.
Wow. That's crazy.
Anyway.
So you mentioned Plaid just goes and gets it.
Yeah.
It sounds a little bit like AI. It makes me think of AI. Is there any tools that you've seen come along on the banking side for users, for people starting their business that they should know about that are AI related, or do you have thoughts or opinions about what's coming down the pipe in that regard?
I do. I can't talk about some of them.
Okay.
Ooh, top secret.
No, it is.
So there's stuff coming.
There's
that's going to be a benefit
coming
for the bank or a benefit for
everybody.
Everybody.
Because
Okay.
there's a thing called open banking.
Is it real benefit or is it a benefit?
No, it's
like, is it
benefit?
You're actually going to be screwed, but they put a nice little.
But you're going to feel good about it.
You're going to feel good about it. Yeah.
So
everyone's getting audited. It's like
misery loves company.
No, and I ride that rail, right? I go, oh, this is really good for me. Terrible for 300 million people who live in the United States. But man, my bank account's going to skyrocket.
Right.
No, this is really good. ChatGPT is a big open library learning module, right? Like everybody dumps their stuff into it. And so you got a bunch of good, a bunch of bad. What the banks are starting to do and other related companies are starting to do is say, I just want to carve out the banking data. And then what I want to do is I want to test that data to see if it's right or not. And I'm only going to allow in my learning database the good stuff. And then we're going to learn from that. And so what you're going to get is a lot of noise that's going to be eliminated, a lot of ghosts. I forget the exact term they're using in AI right
Hallucinations?
now. Yeah, hallucinations. Thank you. A lot of hallucinations out.
I'm what you might call an expert.
There you go.
Glad you're here. Thanks for having me.
And so they're going to start learning that. And so all these big banks are getting together, just like they had to get together with open banking to where they have to share data. They're going to start sharing these data elements through an AI.
Okay.
Through a closed learning module that's not open to the public. Different industries are doing that too. Some of the shipping companies are doing that to try to figure out if AI can optimize shipping a little better. So they're all sharing their shipping data within a closed AI unit.
Yeah,
makes
sense.
sense.
So banking's going to do that too. So I think it's going to help everybody. Bankers are always going to look to make a profit. So but I think they're going to make better products for people out there, and they're going to be able to fine tune products to service your company or at least your industry more specifically, and treat the photographer differently than the restaurant or the general contractor.
Mm-hmm.
Yeah.
Are they going to start holding more and more digital assets and offering that as well?
Yeah, I don't dive into that much.
Yeah,
but yeah, I mean, sure.
Yeah,
I think right now
something you said made me wonder.
I think
about,
right now what we have is digital asset. I mean, we don't have that much cash. Nobody has that much cash.
Yeah.
Digital money. We're
I
know people talk about digital currency. The guys, we've been rolling on digital currency for about 12, 14 years now.
Yeah.
None of this is backed by anything.
Once fractional banking, that's like the flip.
No,
the switch that flipped.
And we took fractional banking up, and they're actually talking about doing away with limits and guarantees and stuff.
What?
Yeah.
Okay, define it real quick for those who are not as versed in fractional banking as I am.
So fractional banking is where, let's say a bank holds $1,000, let's say $10,000. They're told to keep a certain amount of that in reserve, like $2,000, but they can go lend that $8,000 several times. They just have to keep a percentage of what they lend out in reserve.
The idea being that no one's going to come ask for their money at the same time.
And if you go back in history to, I don't know, 1929, when
date rings a bell.
when everybody ran to their bank and said, "Can I have my deposit back, please?"
Mm-hmm.
If you read the fine print on your FDIC deposit, guaranteed deposit, you don't have access to it. It's their money, not your money.
It says Federal Reserve note. It's not even America's money. It's the Federal Reserve.
I'm not
That's
here to,
another
I'm not here
episode.
to bang on the Fed. Yeah, I'm not here to bang on the Fed.
I am.
Well, there's nothing I can do. There's nothing I can do about the system, right? We have to work within the system we have, and this is the system we have right now.
So if a creative wants to, in terms of digital assets, exchange value in Bitcoin, what happens, and how does that affect their? They go, "Hey, I've been in business for 5 years, and all my business is in Bitcoin." I'm just making this up. I don't know. And they go to the bank and they say, "Look at my." And is it like, no, we don't even count that? You basically are starting on the first, the first yard line here with us.
I think the banks are starting to be allowed to do that. You're starting to see more and more of that, because if you held, I don't know, $5,000 share in Ford stock, right? Ford Motor Company stock, you can count that as cash and equivalents. So I got $10,000 cash in the bank and I have $5,000 worth of Ford stock. You have $10,000 worth of cash, but $15,000 worth of cash and equivalent. Now, once the crypto gets fully adopted, if you've got $100,000 in Bitcoin and Ethereum or whatever, right?
Sure.
You can count that as and equivalents. I don't know if it's 100% accepted now, not by every bank for sure. But, the more Jamie Dimon gets, then the more it will be accepted commonly in the world. Yeah.
So what about these cool new banks that are like putting
Bitcoin based, the Bitcoin ATMs and such?
No.
Oh,
RelayFi, for example, one that we've looked at and we have, tested out for different reasons. I'm wondering what your thoughts are around that, because you got this sort of spectrum of like old school traditional community bank, like more personable sort of local bank that's got some front end facing stuff that maybe a bigger bank like Wells Fargo or Bank of America has. Then of course you've got your traditional banks. Then you've got these like online only banks that do all this cool stuff and can issue you a digital debit card like that at the push of a button, which this bank back here is like, no, you got to come in and sign the
fax machine
it to
required.
you. You're going to sign it, and then we're going to carriage horse it over back to you so that they can verify it and then send it in the snail mail back to you. Like the same process is so extremely different, and yet somehow all of it's legal.
Yeah.
Like,
because at the end of the day, it all meets regulation in some way, right? If they're not FDIC insured, I wouldn't put my money in them.
Sure.
Now,
I'll be right back.
Here's no, that's just, again, I'm coming from a very risk averse position, right? Because I work with some companies that used to be FinTechs that bought a small bank, and now they're banks. SoFi bought a bank. NewTek bought a bank. They're off there doing all kinds of FinTech lending and some really cool stuff. SoFi got it started, like Robin, was it Robinhood?
Yeah, Robinhood.
Yeah, they're all looking at buying banks. I mean, heck, Walmart's been trying to buy a bank for 10 years. So at some point, you will bank with Walmart. You will buy your stuff at Walmart. They will, it's the company store.
Yeah.
So
yeah, it is funny because when we've jumped banks and now we are at RelayFi and we really love it, but you're still playing within those guardrails of regulations.
No, you're not getting away from
once in a while you still hit a freaking regulation that's just like the other bank.
Yep.
But
it's
like in the
Microsoft
day-to-day,
Windows 10 or 11, where like suddenly you're changing a setting and out pops that ugly Windows 95 like UI. And you're like,
it's still back there. It's still back there.
The stuff in the background is still there.
Totally.
No, I bank with a credit union. I love them, really do. They're both. I both bank there and they're a customer of mine, and I talk with them on a regular basis. I tried to onboard my company with them, and it took 3.5 weeks. And they, at one point, I called and said, "What's holding it up?" They're like, "Well, you said that you're going to be a retail online seller, so we need your Amazon ID." I said, "Well, here's the catch. I can't give you an Amazon ID until I give them a bank account number."
The old catch-22.
And they're like, "Well, I don't know what to tell you." I'm like, this can't be the way you do this. And so, I had to...
Getting something like that resolved takes how long?
It took 3 business days. And I had to reclassify my business.
So let me counter that. So when we moved from local bank X to RelayFi, I filed the paperwork in 20 minutes on a Sunday afternoon. By Sunday night, our account was active and I was moving money.
As a business?
As a business. We moved Form Films to RelayFi as a business on a Sunday.
And that was the first.
That was like starting
you were a new
like
customer.
Here's my EIN. Here's my shot of my incorporation whatever I had to submit.
If I didn't know you, I'd tell you I didn't believe you.
Yeah, that's legit.
No, seriously. Yeah. I was called by the chief risk officer of literally one of the biggest banks in the country. They're small business chief risk officer. Mm-hmm. They're big enough to separate that out. And he said, David, we're looking to automate the onboarding of businesses, and we can't find anybody who can help us. I said, yeah, because nobody's doing it. Now, again, I think that was 2 years ago. And I think that's now part of the evolution of the banking. Because I know some of the providers who can help with that. You know, LexisNexis has some linking data and some other stuff. And Equifax has a thing called the work number where they can say, oh, yeah, Kevin and Andy belong to Form Films. You're legitimate. You can automate that.
Yeah.
But I think at some point, somebody has to click a button at most banks
I was
to approve that. No, I would
thought it would be Monday morning, and by that evening, I was setting up our multiple checking accounts and savings accounts.
But that's where we are, right?
Yeah. Well, some of us are, right?
Agentic AI was working in that. They have some AI doing that. They have to.
Yeah, I'm sure.
They have to check a box, move forward, check another box, move forward, check another box.
They couldn't have humans in a different time zone somewhere.
No, not in 20 seconds, not in 50 seconds.
Yeah.
Well, I walked away and came back in a couple hours. I mean, it was
2 hours. I mean, I would still say 2 hours.
Yeah.
No,
But still on a Sunday, like bankers
on a Sunday, nobody's doing that. I mean, unless you were the fifth customer that they had, and everybody's just standing around waiting for something. We got
another one. Here it comes. Can I push the button this time? Can I push the button this time?
Yeah, that's the only scenario I would imagine. Yeah.
Brought to you by RelayFi.
Yeah,
we're sponsored.
I'm just thinking we need to reach out and let them know they got a nice plug on the podcast.
Dude,
seriously.
I love it.
No, again, we're getting closer as the technology and as AI gets integrated into it. We're getting closer. By the way, AI is not used in like credit decisioning yet. It's just
math.
Not from
yet.
It's used in the process of credit decisioning, but not the credit decisioning itself. Like the algorithms are still not generally AI. The machine learning, AI, not really. There's a difference.
We're at like the T600, not the T800 yet.
Exactly. Yeah. Exactly. Now, fraud's been at T800. That's been Skynet for years, right?
Yeah.
When you get that, when you swipe your card or when you get the text message and it says, hey, was that you in New Jersey buying $7,000 worth of alcohol? Nope. That's neural networking going on. That's hardcore linkaging in there. And I'm familiar with that.
Okay.
Yeah. But not in credit decisioning.
Okay. Let me ask you that. Well,
no, go ahead. Go ahead.
Do you have any sort of like, I'll just say backdoor secret knowledge of something that every business owner should know, but they almost never do?
Yeah.
That would help them. Like nobody knows if you would just, if you would just write this special thing on your application for your loan, you would get $100,000 more than you asked for. I don't know.
So I work with
like
a guy
a cheat code, up, down, left, right for banks.
There kind of is. And it's really about the levers, right? It's about keeping your personal credit above a certain number. For small business, it's between 680 and 720 on a FICO score. It's having positive cash flow and being able to prove that positive cash flow. And it's being in business for 2 years. It just is. At a bank or a credit union, you can go get a FinTech loan expensively, but you've got to show certain numbers a month. $10,000 a month in revenue is typically a FinTech limit, right? They just want to see
like
money,
a minimum.
A minimum, money coming in, money going out. But more money coming in. They don't want to see a lot of money going out.
Okay.
But it's that kind of stuff. But it's your personal credit that really, from a new micro business owner, it's your personal credit.
What if your business goes through a slump? Hard, the economy takes a dip, whatever. You have a bad year, you have a couple of bad years, whatever. But then you have a good year, or then you have a good half a year, headed into the second half, and you're still doing good. Like, how long do things have to be corrected or on the up before a bank will go, okay, I think we're good to loan you?
Well, that's why banks ask for 2 or 3 years worth of tax returns, 2 or 3 years worth of reports. They want to see the trend, right? But now the credit bureaus and the makers of the scores are getting into trended data. It's the trended data is really important because they want to say, oh, wow, you're making, $100,000 a month. That's amazing. Let's lend off as if you've always done that and if you will ever do that. And then you realize, oh, you're a seasonal business, right? You put up Christmas lights. So in December, you made $100,000. Good for you.
Right.
Yeah, January, not so much, right?
Right.
Yeah. So they want to check those trends to make sure that you are trending properly or that you don't hit a trough at some point, right? Mm-hmm. If you trough too low, then you're going, no, we can't do that. But if your troughs are high and your up cycle's high, then they're going to figure that out.
Are they extending that trend in terms of looking at the trend? Because coming out of the government's response to COVID, which created the economy that we still suffer under. But we serve across a lot of verticals, right? We've got customers from like facilities management to healthcare, all over. And it's just really anecdotally clear to us that everybody's kind of holding under their checkbooks. They're a little bit afraid to write, a check for, productions or any marketing. Marketing sometimes is the first thing to go. But like we've hit, 2 or 3 years tax returns doesn't even get back to when 2 weeks to flatten the curve started.
No.
So like, are they considering it differently now, or are they just still looking at myopically?
They're still looking at 2 or 3 years.
See that?
Yeah. They don't go back 5 years. They're definitely not going back pre-COVID. That's prehistory now. I mean, nobody wants anything pre-COVID.
Yeah.
When companies sit down to build models and gather data, they might get some 2019 data because they want 5 years of stuff and they can't get the 2020 and the 2021 data, so they have to start at 2022. And then they jump back to 2019.
Okay.
By the way, the Wall Street Journal called the whole PPP period, COVID 2021, the fog of credit. Because every bill was paid. All you had to do was call up your bank if you were a business or a person and go, hey, I'm affected by COVID. All right, don't pay, your loan stasis right now. We'll put it in a special category. You don't have to pay it. We're not going to report you late. And then hopefully, by the time it was over and your deferment was over, you could pay your bills then. Right. But I mean, all SBA loans for 2021 were paid by the government.
There was a lot of bad stuff happening too. I remember there was a mortgage company that after you did that, it was like, oh, well, you were classified as having flipped that switch. Yeah. Now you can't refi even if things are held. It's like, come on, man.
There's some of that. There's a little bit of that. Because you guys were asking me, hey, should I take this? Should I do this? Well, do it if you have to. And they shouldn't look at you for taking a deferment. I mean, I don't know, the way I see it, the government came and took your land. They told you could not conduct business the way you traditionally did. So they did owe you money, right? I mean, just like if they were to take your property and build a highway on it, they owe you for that property, right? Mm-hmm. That's been since the beginning of time, right? So, but that they are kind of looking back and going, hey, we really can't evaluate you. And it is penalizing people to an extent.
Is the general opinion or air about the banking world that things are back to normal now, or are they still considering small businesses within it? Well, we are coming out of COVID, so
no. So when it comes to the economy, right? You got to factor in a few things. Government spending is one thing. Political environment's another. Political environment's been a little chaotic lately.
Yeah.
Government spending's been a little chaotic lately. Is this business going to have this government contract? Yes or no? Did it get doged? By the way, that's a verb now. Yes. My contacts at a certain organization, hey, we're getting doged next week.
You should just start saying doggied. See how that goes.
Basically.
Yeah. Right.
Yeah. I'm told I have to be good. No,
stay tuned for the after show when David goes off the rails.
When we go blue.
A Patreon account.
When we go blue.
It's going to rip that shirt off.
Dave after hours. But no, it's there's just a lot of uncertainty right now. Inflation. Good God. When if you've been selling eggs, good for you. You're making some money. If you're paying for eggs, ooh, that sucks. If you're business, Waffle House just took away the 50-cent egg fee, right? Just like 2 months ago. But I sell a product and we add CPI every year. And for a couple of years, I had people calling me going, why is my price increased for next year? I'm like, CPI. Like, you didn't complain.
What does that mean again?
Consumer price index.
I'm asking for Kevin because he's too embarrassed to ask.
Consumer price index.
Yeah.
So basically,
I'm over here going, consumer price index.
You're like thinking, I wish Andy would ask David what that means.
I totally know what it meant.
It's inflation, basically. So when it was 25 basis points or 0.25 for the non-finance people out there, when it's 25 basis points, nobody complains.
Right.
When it's 9%, and now they're paying a normalized like 3%, but the price is still inflated from back then. We're the increase is decreasing.
Right.
So, we have to factor that in. Oh, and I was listening to an econometrist just the other day, and they were talking about prices and price stability, right? And price elasticity. Basically, when the tariffs were put on, everybody had a lot of inventory, and they were given warning for the tariffs. So, hey, we're going to put these tariffs, let's say April 1st. Everybody orders to stock up before April 1st. Well, we're about to hit, as a general overall industry, those inventories are gone. Now we're starting to sell tariffed inventory. So you're going to start to see prices tick up. And that's just the way of the world, just the way it is right now. Now, I think things will normal out. I think we'll work around it. But unless you're a small business selling off Amazon, buying 1,000 widgets a month, if you could afford to buy 20,000 units at the time, that was a smart move. Otherwise, you've kind of priced yourself out, right? So you're competing you're a micro business buying 1,000 units a month that have been tariffed against a larger business that bought 20,000 units 4 months ago, and they've been selling this stuff, cheaper. And now you're about to be equalized. Now your product's about to be as expensive as the others, right? Roughly.
Wow.
Yeah.
Well, we could keep going forever. I feel like.
So all of that stuff factors into whether you're getting a loan, right?
Yeah.
It really does. What do you sell? What do you do? Do you have a contract to do this? If you're, I read a story about a contractor that was got a contract for selling gloves to the military. Well, I don't think they have that contract anymore, right? Well, the guy borrowed money, assuming he would have that loan or that contract for 4 years. Let's say he only had it for 2 years. The loan's to pay for gloves for 4 years.
Yeah.
Did I make enough money? Did I cover my bases?
Hope he likes gloves.
Hope the market likes gloves. So it's a lot of stuff like that, right? I'm not trying to paint a bleak picture, but what the banks have done is they have to act on a medium or worst case scenario. So they've tightened their belt a little bit. They've gone, if you've got C-level credit, you're probably not getting a primo loan. You're probably going to have to go to the secondary market, a FinTech or something like that. You can't go to your bank unless you have very positive cash flow.
Yeah.
Right?
Yeah.
So you jump into a FinTech at this point.
So we're on the back half of my last question. We're on the back half of the year.
Yep.
What is your recommendation for the solo, the small team, the 2, 3, the husband, wife, creative team company? What should they be doing and looking for going into the end of the year?
Find expenses. And this is kind of before the show started, Kevin and I were talking about that balance of I want to maximize my expenses, but that also shows me as having less actual income, right? Profit. And the banks are going to look at profit.
You think there'd be some way they could look at what's the cash flow you had going on before you started buying up a bunch of stuff to lower expenses?
No, exactly.
What's that report called?
Well, not to rabbit trail, but that just goes back to the insanity that, banks don't look at small business owners the way they look at W-2s.
Right.
And there should be a metric for going, they'll always say to me like, you're a small business owner. I know you're trying to reduce your income for tax purposes, but you're screwed. Yeah. Like, why can't we get over that hump?
It's when you have to cross back over to the consumer side. They understand the small business, but when you're trying to get a car loan based off the income of your small business, if you minimize the income of your small business, and now you're like, oh no, I've got positive cash flow. I can afford this. No, you can't.
But that's what's insane when you consider 70% of America is small businesses for some insane high percentage, right?
Well, there are 20, like 28 million, 29 million small business owners in America.
Yeah, it's nuts.
It's nuts.
Like how they have not figured that out.
But it
personal
again,
rant.
Save
that for the sequel, right?
Again, the system wants you to work at a W-2.
Thank you.
Right? Its system works better. The system is greased when you have a W-2 and traditional. I mean, look at California. They try to, overburden the gig worker, right? Because they can't track all that money.
Yeah.
Totally. I get a W-2. My money's tracked. They know exactly what was paid, when it was paid.
Right.
Yeah. Whereas, if I'm selling widgets on the side of the street, nobody knows that. They can't track that.
Mm-hmm.
Right. So again, I see the negative side. I get it, but I have to play in the real world. And you
got to learn to play the game.
Well, it's just, that's a rectangular peg in a square hole, right? How do we work it?
Yeah.
And you're going to win some and you're going to lose some. So
yeah.
Good word.
All right. Well, if this has been helpful for you and you've enjoyed what you've seen here, hit that like and subscribe button. Let us know any questions you still have. Drop them in the comments below. We'll make sure Dave answers every one of them.
Yep. I will hang out for
maybe
questions.
We'll come back for a special part 2.
Yeah, let's do it.
We get a lot of them. But thanks for watching, and we'll see you next time here at the table.
Thanks,
Thank
Dave.
you. I appreciate that.
Cheers,
You're
buddy.
a friend.